Welcome back to REIMAGINE 2020. I'm Yonah Hochhauser, and this is the Word on the Block powered by Multi.io. Today's Word on the Block is DeFi Governance Tokens. We're going to discuss what the hell they are, what they do, and why every real DeFi project might just need one. What are DeFi Governance Tokens? Well, DeFi Governance Tokens allow for a blockchain protocol to be governed by its token holders and in some cases capture value directly from the usage of the DeFi application. This investment model is similar to traditional stocks that can vote on board decisions and profit from dividends when issued. DeFi Governance Tokens get around being classified as a security by issuing rewards instead of dividends to network participants. These projects also make no claim of future profits, unlike that of company-issued securities. But with governance tokens' high market cap growth in the last 6 months, we will surely see this model being challenged by a US governing body that will have to directly address their existence to clear up any confusions as to what separates a governance token that rewards their token holders versus a company that provides dividends to their stock investors. Well, how do they work? DeFi governance tokens function as regular ERC20 tokens on the Ethereum blockchain, but the issuing project creates special purpose applications that allow the token holders to decide on critical parameters for the protocols. The protocol developers normally create a staking contract where token holders can deposit their tokens in order to vote on dynamic parameters, or in some cases, a specific proposal on where the project's development resources should be focused on. Examples of the dynamic parameters that token holders can govern include trade fees for decentralized exchanges, asset listings, the asset risk parameters for money markets, and the protocol's inflation schedule. These protocol parameters are then changed by a multi-sig smart contract that is controlled by the governance platform, where the voted on changes have a time delay so the disagreeing community can pull their funds out of the protocols if they want to. This time delay prevents even the administrators from making any changes to these parameters without the community's consent first. In the more mature governance token models, the protocol fees are split between a project treasury that supports the ongoing development of the protocol and the stakers that stake their tokens in the governance platform. These stakers may also be exposed to additional risk as a safety net in the case funds need to be liquidated because the protocol is attacked and regular users lose their funds. The stakers are then rewarded for putting their tokens at risk of being liquidated in those rare events. We have now gone to the point in DeFi where the token holders must be involved in the governance process of the protocol in order to be classified as a true DeFi application in today's ecosystem. Do DeFi governance tokens have an expected return? Well, currently not all DeFi governance tokens have a clear reward structure, and many of today's most popular DeFi tokens like Comp, Uni, and Aave are still developing one. But the more mature protocol tokens like Kyber, ZRX, and Maker have a clear reward structure that can see real earnings over time. Each project is unique in the expected return for the token holders or for those at stake in the governance platforms. But in the near future, we can assume that all successful DeFi tokens will have an expected return. In conclusion, DeFi governance tokens are finding product market fit and now in most cases provide a real reason to invest in the underlying protocol. The market is maturing. Just in the last 6 months, we started seeing these reward models start to materialize. We expect the innovation to continue and these tokens to not only be altcoins, but be classified in their own category for the unique characteristics that set them apart from the rest of the cryptocurrencies. What do you think? Are DeFi governance tokens necessary to be considered a true DeFi application? Do you hold or plan on investing in any of them? And if so, which ones? Let us know in the comments below. For REIMAGINE 2020, I'm Yonah Hochhauser. Make sure to check back here for all the latest blockchain news, interviews, and more. That was the Word on the Block.